Welcome to Game Plan Sunday. Today is March 15, 2020. We're here with our Game Plan Sunday session. I'm fresh off the road, little peach face popping right now, but we still got to get a lot of things unpacked and uncovered. And so even though I'm fresh off the road, I decided that I was going to commit and do this session. We are starting an hour behind schedule, but hey, I'm glad you guys showed up. That really says a lot about your dedication. So you guys are dedicated. I'm dedicated. We're going to get this together. What's good on the YouTube side? I see you guys. Make sure y'all hit that share button. Share this to somebody who will find value. So it's a lot that's happened over the past week. It was a crazy week. I mean, nothing more but to say, you know, the highest levels of volatility we've ever seen. A lot of you guys are new traders. You've never seen this level of volatility in the market, point blank, period. And I just want to say this because there's a lot of noise that's out there on the web. It's a lot of, you know, people that just pop up. All of a sudden, they know everything, right? And they know this, that, and the third because they read a book or they heard from somebody that said this, that, and the third. You know, what we practice here in Wallstreet Jackboyz is being students of the game. We don't just take what somebody's saying off of somebody's YouTube channel or blah, blah, blah. We're students of the game. We study every aspect of the game. And I'm still a student of the game. Even though I'm a teacher, I am still learning. And the more I learn, the more I teach. And it doesn't mean that I am unteachable because I love knowledge with a passion. But that's the only way I'm able to come here to deliver the things that I'm telling you guys of value to the marketplace, because I got to know what the hell I'm talking about. You understand? I have to be a student of the game. And I say that because with the level of volatility that we have coming into the market over this week, in the markets with this strong sell-off. I mean, this is the biggest, you know, sell-off ever since 1928, right? You know, going into this bear market that we're in a bear market now. We're just entering to a bear market. There's a lot of people on the web that saying, buy the dip, buy the dip, buy the dip. So as you guys start to learn, you know, I might not be your only teacher. OK, I may be one of your teachers. There's going to be plenty of teachers that you're going to go through on your journey. But as you start to compile all the information and put it all together, you'll be able to make sense of this stuff. It's a lot of people that's out here talking about buy the dip and buy the dip. And I told you even the week prior, and I'll show you guys here on the charts, why it's not dip buying time. And you guys saw the past 2 Game Plan Sundays, people were saying the same thing. And I said, no, this is not dip buying time. And what happened? The dip buyers got their heads cracked every single time. OK, so why is that happening? Right? Why are people saying buy the dips? You know, I have so many people that's jumping into my inbox who've been seeing me for years. I mean, we've been online for years, right? Teachers show up to class. If you don't show up, it's your problem. This is free. I mean, I don't know what else to tell you. A lot of people charge $200-$300 a month for this type of service. It's free. If you really want to know, you'll show up. OK, of course, you need to learn how to trade, but the information is very valuable in itself. So that alone is a value point that's why you should join. Right. But there's a lot of people that's out here, whether they Instagram stars, YouTube stars, Twitter stars, wherever stars they are, that's telling people, oh, right now's the time to buy stocks, buy all the stocks, buy houses, you got people selling real estate talking about buying houses. Listen, this is not the time for that foolishness. OK, I'm going to tell you right now, there's what we call smart money and there's what we call dumb money. OK, you have a lot of people that salesy out here that their job is to keep dumb money in the markets. When we make money in the markets, we need dummies in the market. These guys are selling and selling and selling, telling, oh, it's a great opportunity for this. And listen, I'm a stock guy. So whenever you have a stock guy telling you to be cautious on stocks right now, you have to listen to that. Why? Because the environment has shifted. When the environment is shifting, you have to learn how to shift. The same things that you were doing before, they're not going to work in this type of environment. This is a very treacherous environment. Very, very volatile. We haven't seen this level of volatility. OK, we haven't seen this. So when people are saying buy the dips, there's no dip buying when the volatility is that high. You need to wait till the volatility comes down. And the volatility is just letting us know we have high levels of uncertainty. Smart money does not put capital at risk when the levels of uncertainty are astronomically high. Smart money, we're talking the institutions, the big boys who's making the things move, which that's making things move. We're not making the markets move. OK, they are. When the level of uncertainty is so high, they're not going to put capital to risk in equities right now, right? Why? Because it's too risky. The unknown, we don't know. This coronavirus is the pin that is popping bubbles. Okay, not just one bubble, but it's going to start uncovering a lot of bubbles, popping them, and they're going to start to, flow out. And so there's no such thing as buying a dip when you just began a bear market. A bear market doesn't last for a week. Where the hell do these people come from? I mean, I'm seeing people this is time to buy stocks. And I got this stock guru person on my website who's going to tell you what stocks to buy right now. Like this some fucking kind of casino or something, right? This is not a gambling thing. We take calculated risks. We take this very serious. This is where we make money at. And this is nothing to play with because right now we're at a time that we've been preparing for. All right. 2008, when the financial crisis happened, many of us were not prepared. We're here today with new tools, new skills that we know how to navigate, that we'll know how to navigate during these times. OK, so with that being said, I just want to get that out in the air because, these videos, they should be having hundreds of thousands of people. I mean, likes on the hundreds of thousands of likes should be on these videos. Why? Because we're the real deal. A lot of these guys got hundreds of thousands of views and they don't know nothing about stocks. They don't know nothing about the markets. They don't, right? They may have a title or something, but they don't know about the markets. We live this. We eat, sleep, and shit this shit. You feel me? Yeah, that's right. So we eat, sleep, and shit this shit, right? And thank you, Dustin. Big night tonight, debate tonight. That's right. So we got a lot of things that's uncovering. We got the political atmosphere that's going, mayhem. We got the situation with Bernie and Biden. Right now, look like Biden has the upper hand. Definitely interested in seeing what this debate looks like. I'm pretty sure Bernie's going to smack him up. He might forget his sentences, whatever. But Bernie is going to be pretty sharp. And this is his last run for him to even try to get anything out of this situation. But right now, the markets is already priced in that Biden has won, which is interesting. Because let me go ahead and just cover the political side of this thing. We're going to look at the equities and everything here also. But on the political side, we have a lot of things that's uncovering. Okay. We have a small cycle inside of a big cycle that's hitting up against each other. And all these different cycles are coming together, which makes we have a stronger confluence of the downside. We have, stronger signals that says this thing is going to come crashing down. Right. And so with the coronavirus being the pin that's popping the bubble, this is really not good. Then we have the political stuff right now, right? Where I told you guys week over week, Trump is going to put himself in a very bad situation because he brags so much about the economy. And when the recession hits, he's going to have to wear the blame. That's not going to be good for his political campaign, even though Biden is much weaker than him. But with the economy deteriorating the way it is, it's going to weaken Trump. So it may make them, where it's, evenly matched, I would say. If Bernie wins, I think that he has a stronger chance of beating Trump than actually Biden, because again, as I told you guys, how this thing is going to unfold, the layoffs we haven't even gotten to talking about the aftermath of this, right? We're in the beginning stages, okay? Recessions don't last for a day or a week. I don't know what people are coming at. You don't buy on the way down. I don't care who says buy on the way down. No, you buy once it stabilizes and it starts to show signs of healthiness is coming back. You get in there. You're still getting at a discount rate. But if you catch it on the fall, you're gambling. Okay, we're not trying to gamble. We're taking calculated risk. So there are certain times that you need to be trading. There are certain times you need to be swing trading. Certain times you need to be day trading. Certain times you don't need to be trading at all. And that's exactly what last week should have been about. You shouldn't have been actually trading anything because you were gambling, right? We saw swings that move like this in one day. Okay, I'm talking about thousands of points up, thousands of points down, thousands of points back up. You can't play in that terrain. It's too much volatility. You got to let the volatility ease out. Okay. And then you come in when you have more calculated risk. We can't calculate this right here. I told you guys, this is just starting and it's going to get worse. Now, typically when you get that first decline going into a bear market, the markets typically will try to rally up until it rolls back over. Right. So typically what you will see is the first shock of the market. And then you'll get like a little rally that comes up and it's just a fake out. And then it'll break off and then it'll come back down, crashing further down. Okay. That's the way it normally works. If we look back in time, that's the way we see that the markets work. Right. So if you look here, and I was telling you about everybody's talking about body dip. Everybody who bought the dip got their heads cracked. Right. Because it turned into a day trading market last week. Right. Okay. So this is the first drop. And buy the dip. I told you, game plan. And you can go back and replay every game plan Sunday session we have, and you'll see this. Buy the dip. I told you, the dip buyers are going to try to come in and try to uplift this thing because the whole key is to create this illusion of confidence that's in the market. to get people back spending money. So you have this fake movement that come in here, boom, you get your head cracked. All right. Then it's, okay, here you go. We got the floor now. Let's go buy the dip. Boom. Okay. And here we go again. Okay. Now we have people saying, buy the dip. And right now, the market is down almost 300 points, right? NASDAQ down almost 300 points right now. Gold is slightly up, right? We got the Russell down 57 points, Dow down 866 points. The ES is down almost 100 points. So anytime you have a day that's down before the market opens, it normally opens up, in a worse situation for the next day. And so what we may see here is that this will come crashing down again. Okay. The Feds just came in and I was on the road. As you guys know, I just jumped in. Shout out to Mark, because Mark has been keeping me updated as I was on the road. We have a conversation. He was telling me, and I'm just pulling up at the crib like right now, just coming at the house and I'm jumping straight on the game plan Sunday. But he's like, hey, the Feds are cutting rates to zero right now. So thanks for Mark keeping me informed, because I'm on the road. But that's what community is about. Community is about colleagues, right? We have each other to help each other to grow in this game. That's why with the new website, if you guys haven't checked it out, check it out. Make sure you create your profile. The website is free for everybody to join now. Now you do have to pay for the training. Okay, we got to make some kind of money to keep this stuff up. But the website itself is free. So network and join with other people, like-minded people, so you can learn something. You can network with each other. So anyhow, he was telling me how the Feds are cutting the rates right now. And that's interesting because they cut the rates to zero. And let me just pull that up. I mean, they were losing control over it anyway. So, I mean, it's easy for anybody to see that they were going to zero anyway, right? Here go my yield curve that I create, right? And this is on the website also, so that you guys can manipulate the data and use it on your own. But, the rates are already down here. This is on Friday, right? And I just updated this. So this is where we were anyway. So all they did is just cut it down here anyway, right? When they did the emergency cut, I believe it's supposed to stop right here, but it's been falling on its own, right? So tomorrow you guys will see this is going to be at zero, right? Because they cut rates to zero. And you see this thing has been spiraling out of control, right? Let me see. All right, let's just go back in time, right? Look how fast this thing has plummeted, right? Just give you a week ago, okay? Boom, boom. Look how it drops every day. Boom. That's the Feds manipulating it. Right? They're dropping this all the way down. And now tonight, we just got the word that they cut rates, another emergency rate cut to zero. The crazy thing is that the freaking, the Feds, they have a meeting this week on Wednesday where they're supposed to be cutting rates. So they did 2 emergency rate cuts before they're supposed to be scheduled to do a rate cut. So the question is, what does the Feds have up their sleeves? This is what we know. We know that the Feds are going to do everything in their power to try to keep the bubble going. So they're going to flood the market with paper. They're going to flood the market with money, right? That's what they're trying to do. Cut interest rates all the way down to zero. And by the way, Donald Trump finally has this wish. He's been begging the Feds to cut the rates. And all of a sudden they have done it, right? Because the terror, the enemy of our lifetime is the coronavirus. And what y'all don't see, if this is like a Scorsese movie, you got to see the script, man. People are so freaking crazy. I don't even understand. I mean, maybe because I watch movies every week now. So because I watch so many movies, maybe I'm plotting things together like a movie. It just makes sense, right? These movie guys, they're not coming up with movies just because. I mean, they know these situations normally play out in some kind of way, in like a realistic way. Those are good movies when they play out like that. So if we look at this like it's a movie, you have to say, what's the best case scenario? What's the worst case scenario? We say the bull case scenario and the bearish case scenario. And we find a consensus, right? We try to stay around a consensus so we're not too far from what actually comes, to pass. But as you see, if you guys saw the speech on Friday, right? Whenever you see Trump and them, they've been on TV every day of the week. That tells you how bad this thing was. When people was joking around about the coronavirus, I was telling you, this is really serious, actually, because anytime you see them constantly on TV, what they're trying to do is calm the masses. Because, again, you get the overreaction, but people should probably overreact, to be honest with you, because this crisis, what we're dealing with, it's just beginning, and it's going to get worse. The supply chains, are in shock right now. So that means right now people are running out of the basic needs that they need because people are panic, and they're getting everything that they need, preparing for a lockdown. And we're all on lockdown, right? Countries on lockdown. Look at Italy. They're on lockdown, right? In fact, Trump is locking the U.S. off from everybody. Europe is on lockdown. Europe can't even come here, right? So now we got beef with Europe, right? And so this thing is just beginning. This is not a buy in the dip session. What you may get is the Feds is coming in trying to create inflation in here by providing the markets liquidity, and they're trying to get that in here. And then you get these fake rallies where people will say, oh, the Feds are accommodating the markets. But remember, everything is on gridlock. So everything in your house is made in what country? This is made somewhere over in Asia, probably, right? And it's all on lockdown. So it can't nothing come in, can't nothing come out. So how are you going to get the things you need? This is really going to get out of control. And I know that people say, oh, don't panic, don't panic. And it's not about panic. And it's just about, you being able to prepare for the worst case scenario. It's fine to be optimistic, and we want to keep optimism in mind, but we can't be blind to the facts, right? And when you don't be blind to the facts, people like to say, oh, you're pessimistic. No, I'm a realist. We don't have time for these bubblegum games that you guys are playing. The Feds are losing control of the economy. And I told you guys this. They're going to try to cut interest rates because that's their tool. They're going to flood the markets with liquidity. But how is that going to stop the coronavirus, right? The coronavirus right now, they're shutting everything off so much because they're trying to contain it. But that also means they have to shut off the economy, right? So there's going to be businesses that's going to die from this, meaning, boop, you're going out of business because you're going to run out of, liquidity. Now, that's what they're trying to, put some liquidity in there to help it. But a lot of these small businesses, they're going to go out, okay? That means the unemployment rates haven't been impacted yet, but they are going to be impacted, right? So people are going to lose jobs. There are going to be lots of jobs that's going to be lost. That hasn't happened yet. And that's why it's important for the Democrats to snug Bernie out of this situation, because when people start losing their jobs, they're going to listen to Bernie, right? They're not going to care about Trump saving banks, saving corporations. They're going to want to know what's in it for me. And that's what Bernie's platform is running off of. Whether you want to call it socialism or not, if they're bailing out banks and they're bailing out Wall Street and corporations, what do you call that? It's the same thing. I don't care about the word psychology. It just is what it is. So we have to try to be objective about these things. And so I say that to say this because let me show you guys. Got a little framework over here. Granddaddy Dalio provided us with this. Now, this may be a little too advanced for a lot of people who don't understand economics and the financial markets and things like that. This is let me see if I can pull out some of this stuff. This is a lot of work. This is 3 books. If I can just show you, this is 3 books of work, case studies and everything. And this guy's a freaking genius. Now, he's very humble. He'll tell you that he doesn't know the outcome of these things, blah, blah, blah. But he's been able to predict these things very accurately. Why? Because him and his team of analysts, they went back through all the data, through every recession, through all these countries, and they compile frameworks, models, basically, that they can identify this recession looks like this recession in the past. And all the elements are the same. They have different types of recessions, right? You got stagnations, deflations, you hyperinflations. There's all kind of different causes of these recessions. And recessions can turn into depressions, right? And so he's put together this body of work, and I'm a student of the game. I've been studying it. So when I wrote the article, when I was telling people about the recession to come, let me show you guys this real quick. And again, if you haven't signed up on the site, go to the button right there on the front page. Make sure you sign up. But if you go to the blogs, in here, you'll see the last article I wrote was 6 months ago. The world is not ending, but a recession is on the way. Lots of value unpacked in here. You can go back to the Gold is Real Money that led up to that article, because I wanted to educate you guys on how money works in real life, right? We talked about income and wealth inequality and things like that. We talked about a lot of things in these blogs that you can go here and read on your own time. They're there. Make sure you share them with somebody, right? And we talked about this whole recession thing coming and why. I go over these cycles because I'm a student of the game. I learned a whole lot, and I'm sharing it with my people. And so anyway, when we talked about, the economy crashing, the market crashing, and looking, the evidence, every recession is a bit different. And so we don't know what kind of recession we're entering as of now, but there's strong evidence to support a recession on the level of 1929 Great Depression that is on the way. That's not pulling shit out the ass here. This is from studies, okay? So from studies, and again, I do have to get back on my studies here. So the more I learn, the more you guys learn. Because the more I know, I teach. Right? Let me see if y'all can see that. Right? And you can't find this chart on the web. Right? But he got it in this book. And he goes from all the way back to 1930s. I don't know if you guys can see this card, kind of blurry. But anyhow, you can see all the way from 1930s. And this is interest rates. This is the Feds manipulating the interest rates to get the economy where it's set. And you see where it peaked. That was way back in 87. And then it's been coming down ever since. We hit 0 under Obama. And they raised it to 2.5 under Trump. Excuse me. That's my phone there. And they raised it under Trump, right? And then the markets wasn't happening. So they got to bring it back down. And that's why I've been showing you guys that they're going to have to bring this back to 0. This is a model. This is framework. There's lots of valuable information. And you guys remember we talked about, was it last year? Was it November when we called out Dalio had $1 billion of puts on the S&P 500. So he had $1 billion short the S&P 500 by March. Okay. It's March now, right? You see, even on my Twitter right here. All right. Granddaddy Dalio, he ain't messing around. He putting up $1 billion of puts behind the market cycle expertise that is going down soon. Okay. His expertise. And he said by fall by March, right? We told you. Now he tried to clean it up because they was coming after him. You already know he got it because he's a big dog in the game. When you're a big dog in the game, you can't be out here, causing fear. Or if it sounds like you're causing fear, the big dog, that means, the elite, they're going to have to come, pull the rug from up under you. So he already understand it. He came out, try to say, oh, I'm not short the markets. Bro, you have $1 billion of puts on S&P 500. What do you call that? Okay. Yeah. Like we know too well. We know that you were shorting the markets by March. Don't know what he knew. Don't know if he knew that the coronavirus was going to hit, but he damn sure made some money. Okay. That's $1 billion and shortened the S&P 500. And this is what happened. Right. And it was clowning him last year because he didn't really make no money. Actually, he didn't make no money last year because the markets had went crazy high after the Fed started injecting the liquidity. He had the right framework. But what happens is the Feds, they get craftier and craftier with the manipulations. So they try to find out different ways that they can manipulate the markets. Trust and believe me, the Feds have some really crafty shit for your ass right now. Why do I say this? Because the Feds are due to cut rates on Wednesday. We've had 2 emergency rate cuts and we're at 0 right now. Now, 0 doesn't mean it can't go negative, but we haven't never seen in history where negative rates have been positive for any economy. Japan hasn't even been able to recover from the negative interest rates, and it's detrimental on the currency itself. They do not want to go negative. However, you got some people that's telling, oh, we can go negative. I really don't know what kind of manipulation they got up their sleeves this time, but they do have some kind of manipulation. And we know that Steve Mnuchin talked about doing 20-year bonds. They talk about doing 50-year bonds and 100-year bonds. Who in the hell buying 100-year bonds? Your life expectancy is not even 100%. I have no idea who's buying it. It'll probably be the Feds because it's what they're doing right now. They're buying all kind of stuff to try to keep this market from going down. If it wasn't for the Feds, the shit would be in free fall right now, right? So they're doing what they have to do, and I'm not mad at them about it, but I just want you to understand that this manipulation that's taking place right now because the coronavirus is exposing a lot of weaknesses. And it's going to be worse. Schools is out. We've never seen a time when they shut down schools. I mean, look at this. You go to stores, you can't get supplies. This is not good. This is going to be worse than what they want you to be calm. And what did I tell you? Go back and look at every game plan. Y'all do me a favor. Go back and look at my game plan Sundays. Tell me the points that was of value. We'll go chop up the videos and repost them. I'm tired of people posting BS all over the web. We've been all over this for months. Every aspect of the game we've covered. And we provided ways to actually make money in this situation. Not buy the dip, just buy stocks, just buy stocks. Stop listening to stupidity on the web. These Instagram stars or whoever they are, they have no idea because they're not trading the markets every day. This is what we do. You understand me? We do this. And so I know the theory and I know the works because I'm in the markets. Here I am debating with people who I have my Series 7 and theoretically, this is a great time to buy stocks. Dummy, this is the beginning of a bear market, okay? It just started. It doesn't last for 1 week, okay? This lasts at least 6 months, okay? If this is the beginning, why would you want to go and buy right now? Meaning that this is going to further go down. Respect the trend because the trend is your friend, right? So if we're on a downturn, that means most of the plays are going to start going downward, right? You looking at my daily chart on the S&P 500, come back, right? And this is another reason why I was telling people do not buy the dips. What I'm going to do, let me clear my chart up just a little bit here because I trade with the Fibonacci, but my favorite tool is the moving averages, right? If I had one tool to trade with, it would be my moving averages. I'm going to be honest. I'm a Fibonacci king, believe that. But the moving averages, they work. This is what I was telling people, how they was going to buy the dip and they was going to get worked out, right? Because of the weekly chart. You got to come back, right? You got to come back on the weekly. We got all these levels that we had to go through. And I saw this. And this is what happened. We bled through this 200 moving average, the yellow line. We bled through that. Okay? That is not good. And what we're doing right now, this is where on a weekly chart, I know what the daily chart looks like. That's fine. And it may do what it's going to do. But you cannot ignore the weekly chart. This is a key level of support. Okay? It held before, but it's breaking now. It bled through, and we're still trading under it right now. So the key test for this week to see if the Feds can keep this thing stabilized up here in this range. And if they can't, we fall further. Okay? That's what is going to happen. You see on the weekly trend, on the stochastics, we still have downturn to go. The trend is still negative. Okay? The momentum has just shifted. We got our first red bar here on the downside. What does that mean? That means we have more weeks to go. Even on the VIX, let me go take you to the VIX. And a lot of you have never even heard of the VIX until you came to Wallstreet Jackboyz, and that's good. Because that's how you know these guys don't know what the hell they're talking about. I don't care if they say, buy stocks. That's so generic. That doesn't mean anything, right? Anybody can say, you should buy stocks right now. It sounds like a good idea. Stop listening to these dummies, okay? I mean, y'all got to forgive me. They had me hot, man. I got gurus out here talking about, no, you should buy the dip. This is buy on the way down and, average down. No, you don't do that. That's stupid. You wait till it stabilizes. When you see it stabilize, that's a better buy entry. But when it's falling, you don't buy the shit when it's falling, stupid. You're going to catch the wave down. That don't make sense. You wait till it falls and it's stable. It hits the floor. And not just hit the floor, but come sideways off of that floor where it just starts to come up. When it starts to come up, then you get in and ride it on this next wave in. That's simple shit. You see what I'm saying? Thank you, Topaz. Catch the fall of night. And Topaz, y'all know me and Topaz knows we were on the phone when Donald Trump was giving his speech, right? And so we were on the line, we were on the phone, and we're looking at the markets, and the markets are down, 50 points, I believe. Topaz was like 50 points when he first started because his energy was off, right? His energy was off. I was like, yeah, Trump is dreading this. He's not feeling good. But see, Trump, boy, he pulled out a smart move. He bought he bought the CEOs of the top companies at that speech. That shit was that was diabolical. Y'all keep sleeping on that dude. He knows how to make a show. I mean, he is show business, right? So, he did good. I give him an A+ on that because he couldn't have did it on his own. So he bought the big dogs out. He bought Target out, CVS, Walmart, and all these CEOs. If y'all didn't catch it, they came out and was talking how we're going to work together to defeat the coronavirus. The Rona is the greatest threat, right? And so if you ever notice in every movie or throughout history, it's always got to be some kind of crazy threat, some kind of danger. We had 9/11 in the early 2000s, right? And that was a terrorist attack that united the country, right? And so now you got the Rona that is possibly, if they can defeat it, will unite the country. And guess who gets to wear the victory of that, right? Guess who gets to wear the victory of that? Donald Trump. Right? He's going to say he's the savior of the world because he pulled together the private sector to defeat the coronavirus, which is the greatest threat to humankind, the way they're making it sound right now, right? So that's the plot. That's the bull case scenario. Bull case scenario is that they're able to contain the virus, suppress it, defeat it, get the economy back popping, right? By November. They got to do it by November because if they don't, then Trump will probably lose the election. But if he does this, it would be the greatest turnaround ever in history or the greatest story ever told. And that's the way they want the plot to be out. So that's bull case scenario. right? Worst case scenario, this thing continues to go, and we see the Feds lose control. Well, as of right now, you got Trump that's kicking in fiscal policy now. So you guys got to understand we have monetary policy, which is the Feds. We got fiscal policy, which is Trump and the government. And he's already stopping interest rates, deferring interest rates on student loans. So why would they actually need to do that on student loans if there's not a bubble there? Right. We've been talking about this when I called out the recession situation. We took a look at the debt levels, and I don't have my charts here because I'm just getting off the road here. But if you go back to the past game plan Sunday sessions, I think it was back maybe in September, you can see they're all recorded. So you can go back and watch all of them if you want to. Well, you will see where I was showing you my charts where I track the data myself. Because again, I'm a data scientist as well. So I understand the data, I collect the data, and I analyze the data. So as you go in, you see the debt levels are higher than they were pre-Obama years, Great Recession. Our debt levels have surpassed that. So we have bubbles that's out of this world right now. And, with this coronavirus popping this bubble, you're going to start to see other bubbles pop and come uncovered, right? We talked about the IMF and the World Bank has been issuing for the past year or 2 years, possibly. I can't remember. I know at least for the past year, they've been issuing warnings on unsustainable debt levels in the U.S. and in particular corporate debt levels. Why is that important? Because these corporations, they're going to need bailouts. And right now, the airline industry, they're probably about to get the bailout. I caught the tail end of the call from Powell talking about why they cut interest rates today. When Mark had tipped me off, I was in the car. Mark said, hey, they cut rates. I tried to get into it and I tapped into it and listened to it. But I told you the Feds, they got some tricks up their sleeves. We don't know what it is, but we know negative interest rates will be detrimental to the U.S. economy. And we don't need that. So what else are they going to try to do? They're going to find ways to try to manipulate this thing as best they can. They're using fiscal policy. That's what Trump is doing, talking about cutting payroll taxes. That means you're not paying no taxes, from your work paycheck. That means you got more money to spend at the end of the day. The question is the human behavior. Would a human behavior succumb to that and actually spend? Or will you smarten up and save your money, get your emergency fund together so you can take care of your family through this collapse, through this Great Depression that we're getting ready to go into? That's, again, that's the certain things that they can't control. What they do is influence the behaviors of the masses to get people to spend. The confidence is leaving the markets now. That's why you have all this massive selling. Look at the VIX right here. Again, let me see. You see the VIX right here, this high 77. I want to take you guys to the monthly on this. Look at this. You see that? That's extremely high. And if you look at this monthly chart here, we had a squeeze that fired on a monthly chart. You guys know how many sessions when a squeeze fire off, how many sessions it normally would fire off for? It normally fires off for about 8 sessions. So I don't know if it's going to fire off for 8 sessions, which that would be terrible. But if I can be conservative, let's just say if we do 4, okay? 4 bars, right? Oh, exactly. Mark says 8 bars on his monthly. Let's just be conservative, say if it fires off 4 bars. It just fired long, squeezed this whole time. We got low levels. We had levels way down here at 12, and I held that market. My Fibonacci levels I have not removed. They're still there. And what did the markets do? Exactly what I said it was going to do. The squeeze fire, I didn't think it was going to come up this high, to be honest. If you go back to the past game plan sessions, I told you this was the first level. I told you this was the second level. I didn't know if we was going to make it up to this level, but I did call this level. But what I did not know is that we were going to go to that level. That was enough for me to stay out of the markets. Like, this week, I think I was talking to Topaz, and I'm like, nope, pulling out. It's not a place for me to play in, you see, because the market's just woof, it's moving. And if you're not day trading, you're going to lose money. You can't be swinging in this level of volatility. This is not good. So if this is just firing off, then that means that we have more sessions to go higher. Doesn't mean we're going to go straight up. We could see it start to, move into like a bull flag up here, right? We could see that because we're up really high. This doesn't just fall all the way back down once it, once this gets to this high, it doesn't just drop and plummet down. It has to work its way back down. So the level of uncertainty is really in the markets. Okay. So we have to be very, very careful on what we're doing in the markets. So the strategies change when you have high levels of volatility. So what we would normally do in a swing trading environment, we now have to do in a day trading environment. Okay. We have to do this in a day trading environment. Let me actually catch the VIX live on the futures and see what they look like. Tip on out. That's right. So that's right. Topaz said tip on out, as we would normally, again, as we would normally go into our sessions. We normally would, capture about 50% profits on our, 50% targets here. But with the level of volatility being the way that it is, if you can catch a 20 or 30 in one day, because the volatility is so high, you can catch a 20 or 30 in one day easy, right? Or you can catch that 20 and 30, tip on out. Simple as that. For you guys that's like swing traders, you're not able to trade on, throughout the day. If you get into a position, you need to go ahead and set your closing order as soon as you get into that position at a 20% target or a 30% target. If you got the Wall Street Jackboyz trading journal, that'll help you to actually figure the math out on that. Or you can pull out your calculator, if you understand the math, to go ahead and put in your target to exit at 20 or 30% profit. So therefore, it automates the trade process for you while you're at work and you got some capital at risk. You don't have to worry about it. When it hit that target, you closed out. You done made money while you at work. That's how you play this game. So for that reason, the level of uncertainty is here. I haven't had time to check the charts. If you guys have any setups that you want to take a look at, we'll take a look at that real quick because I know we kind of went over on time. But I just had to get some things out the air here for you guys. What I would like to take a look at, if you're looking at on the bull case scenario, stocks is probably going to go up higher right now, will be the consumer staple stocks. Why? Well, I'm going to talk about consumer staple stocks, right? Because everybody, mamas are going shopping at the Walmarts and the Costco's and the Targets. So they're making money. The problem is that we have supply issues, and that brings another issue after the fact. But as of right now, if anything is probably going to move, it'll probably be consumer staples. And then also some of the tech stocks, like Netflix, right? Kids are home from school, right? For 2 weeks. So what are they going to be doing? Playing video games and watching Netflix, right? And so if they got Xbox, make Microsoft, they may be a good play. Let me actually just take a look at the chart. I haven't had time to look at nothing, but let me just take a look. All right. So just taking a look here. And by the way, Bill Gates just stepped down from the board of Berkshire Hathaway and Microsoft. So that was interesting. And we had the markets. We snapped back from under this 200 moving average. Okay. Again, the trend is down. So it's hard to really play this to the upside. But we do have a trigger that says, hey, get in here. And momentum may shift. So again, if we see any positive activity, again, wait Monday out. Do not jump in on Monday. I don't care what the news is saying. I don't care what the gurus or the Instagram celebrities are saying to do. You do not get in any kind of position on Monday. We got pent up emotions. We got to let the markets get its emotions out the way about this interest rate cut. And then Wednesday, the Feds have another meeting where they're supposed to cut rates. The trick up the sleeve is, do they go negative? We don't know. We don't know what the Feds are going to do. We know that they don't want to do it, but pal, it's like playing poker. People play poker, they put their poker face on, right? They try to bluff you out. They sound real confident, right? So they sound confident. But as we've seen, through every past recession, whether you had Bernanke or all these other guys, they said the same stuff. They were saying the same thing. I was watching The Big Short. If you guys have never watched The Big Short, especially for you new guys, if you never watched Big Short, go and watch The Big Short. Like right now, today, as soon as this is finished, if you're not watching the Democratic debate, then go watch The Big Short. I watched The Big Short, and I love the movie. I bought it. I probably watched it maybe 5 times. So interesting. All these guys call the fraud and all the stuff that was happening during the recession. But the guys who everybody was following, they were very confident, and they were totally wrong. Totally wrong. They got it wrong. In the middle of a debate, Steve, what's his name? Steve Heisman. They call him Mark Baum in the movie. These guys are hedge fund managers, right? And this guy confronted and had a debate with him and told him in the middle of the debate, when the guys was lying, trying to keep the confidence in the market, Bear Stearns, all that fell, went down the drain. People left the freaking debate because it was happening in real time. They were lying in real time, and dude confronted him. And the markets is just sold all the way off, and the government and everybody's bailing them out, right? So what we're going to see now, right? I got somebody's asking about an oil company, oil companies. This is not the time to get into oil because they're going to need bailouts. All right, they got so much debt. See, under Obama years, again, we bring up the rates here, right? The interest rates were really little, right? There was zero. So when there was zero rates, that was a time for you to borrow money, right? Don't you wish somebody would have told you this back in 2008? But nobody ever taught you this, right? Let me go back. What I want to do? Let's go back some years. All right. There we go. So I got my chart up right here. Here we go. So from 2008, here we go. Last 12 years, right? So 2008, you see the interest rate? You see that gray line down here? That's the Feds suppressing the rates. They kept it down to zero for the longest time ever in history. Why? Because they never could find inflation. They could never create inflation. They couldn't find it, right? And they were trying to create the inflation, but they kept it down to zero, right? So people say, oh, Obama grew the economy, right? The Feds control this shit here, okay? Not no president. He's just wearing the trophy. The Feds brought the rates down from 5%. I only have 5% on this particular chart, but if I go back a couple of years, you may see it. From 5%, they dropped it all the way down here, and they kept it suppressed until Donald Trump came into office. And this was the beat that Trump had because they started raising the rates, and we never actually recovered from the Great Recession. This is the Great Recession. That's what they call it. We never recovered. When people lose jobs, they lose homes. When they lose homes, they lose their credit. You know how long it takes for people to build their credit up, right? And all this did was create a wealth gap like we've never seen before, right? Because they cut those rates down, and Wall Street took advantage of that. People that know the markets took advantage of that. The regular people who lost it all have no idea of what the hell is going on in the economy. And that's why we come here and we teach people. I'm trying to get people to show up. You don't show up to class, you don't learn this, you become a victim. Share this with somebody. This is the real deal. I don't care about those other guys with titles. I'm in the markets. We're in the markets. We're students of the game. So anyhow, when this Great Recession after Trump came in, right, they started raising the interest rates, right? When they started raising the rates, they called it quantitative tightening. So they started tightening the rates. Trump wasn't having it. He was beefing. Wall Street wasn't having it either. They started beefing, and boom, there you go. You start to get the rates to start to come, right? Start to come crashing down now. So now we're back to Obama years, right? And this is what Trump wanted. He's been begging for the zero rates. I don't know why, which is really weird because let me actually take you back. Every time the Feds cut the rates, we are in a recession. They haven't announced that we're in a recession yet, but do you need for them to announce that you're in a recession? We're in a recession. And they don't call it until after the fact because they're trying to save the day. So from the 87 crash, you guys can see this. Boom, interest rates cut. But you see they have at least 5 points. These are the points on the side to save the economy. Same thing here. Look how much space they had. Same thing under Obama. They have 5 points. This is where we are. This is the highest that we got. Here, we never had 5%. We had 2.5. They don't have enough in the tank to save the economy. Okay? And this is coming from big dogs like Granddaddy Dalio, who studied this, who's saying they don't have enough in the tank. We can't depend on monetary policy. We're going to need some other things. Fiscal policy, they're trying to do that as well, but it's not going to be enough, right? Because who's going to pay for all this stuff, right? They cut payroll taxes, right? When February come back around, people trying to do their income taxes. Do you get income taxes back? You didn't pay no damn taxes. So again, it's like the shifting, the manipulation to try to keep this thing, they're struggling, they're squirming to try to get this thing correct. And I just don't see this being a short-term fix. If we ever get out of this situation, which I'm pretty sure that we will, but we will have a whole new system, right? The whole talks about cryptocurrencies. I've been talking about this stuff because if they go negative, they're going to crash the freaking dollar. And they're already working on a digital currency, okay? We're going to go to digital currency. Bitcoin and them, they're going to crash. They're not going to have them. The government is going to do whatever they got to do to sabotage them because they're going to force the people to use their digital currency, right? And then the manipulation continues to go. And for all my Republican friends, and I had a debate with somebody who obviously didn't know who I was. And I'm like, I don't need a lecture on this stuff. I actually teach you. I understand gold perfectly clear. But I understand there are some hopefuls that believe that Trump is going to put us back on a gold standard. As I mentioned before, I will believe it when I see it. Okay. I think Trump is a crazy dude. He's cool with me. I'm good with Trump. I know some people are not, but I'm good with Trump. But to think that he's going to put us back on a gold standard, I think that that would be suicide. You got to understand how the system works is the feds create the wealth gaps. I mean, they're set up to, to create this whole situation. They create the imbalances and they create the wealth gaps. Now, they say that they can't stop it because they can't force people to know about this stuff. Most people don't know how this works, but the capital markets do. Wall Street knows. And when Wall Street knows that the Feds are going to put on their jersey and jump in the game to play on their side, it's like you playing a football game in the Super Bowl and the refs put on your jersey and playing the game with you. It's like a cheat code. You feel me? Wall Street know this. So when the Feds is pushing liquidity in the markets, that's what they're doing. They're not letting the free market play itself out. In the free market, if you have a real capitalist society, a free market, the weak has to die. It's no bailout. It's no saving. You have to let them die. Let new companies, new competition come and take over and get the spot. That's the way a free capitalist society. But we still have government intervention, so it's still a form of socialism. Again, anyhow, not to get too much on that, but I just want to kind of educate you guys on how this whole system kind of things works so that you can have some better expectations going into the next couple of weeks and months. There are lots of uncertainty. Nobody knows how this is going to play out. We never had like this coronavirus kind of situation when they're shutting out everything, but we do. It's like playing a chess game. We can see pieces ahead. I see pieces ahead. I see when I move my rook here, you move your bishop here, my limitations that I can move with that rook, I may need to use another piece. I play the stock market in the same way. I'm already 10 steps ahead. I'm planning every scenario out. So when I'm calling out plays, I'm planning them out that way. And when I'm actually trading, it's the same thing. I have a certain amount of capital that I put at risk. I have mitigation level set in place, how much I'm willing to lose. That's it. When I make certain targets, I'm cashing out. And then you cycle, rinse and repeat. That's it. So anyway, with that, let me see. I'll take something from you guys real quick. It might halt again. That's right. Yeah, we had circuit breaker stuff. And every time you see this, they stopped this from trading. Like, that was crazy. Anybody, y'all see that? Y'all didn't get the messages? So you get those circuit breaker stops, man. That's letting you know right now. And this is not to be played with, But you got guys that's not even in the stock market. They don't even know. They just selling people because you got to have dumb money in the markets. Yeah, on the way up, too. That's right, Dustin. Yeah, they stopped it on the way up, too, because we broke a record on his way up. Look at that sharp candlestick. That was freaking bananas. That is bananas. This is Microsoft that bounced off of that. But yeah, so those are probably, if anything bounces, I'll be looking at some more consumer staples because people got to have their goods to survive. And then some tech stocks because even just like Wall Street Jackboyz, we're on the internet. We're not dependent on, having large gatherings, some of the trade shows and people like that be doing it. No, we have Wall Street Jackboyz. The classes is all online. Game Plan Sunday, everybody's logged in, everybody's networking. We don't need a public settings. Another funny thing is, I'll say this before I close. I know they have Zoom, and we use Click Meeting for our Game Plan Sundays here. But Zoom is a place that a lot of corporations use, and they had the CEO of Zoom saying that he was going to provide their software for all K through 12 schools. So they're already trying to figure out how to get kids to stay home, right? They already got that on place. And again, this is one of those plays that Trump is going to take credit for, having the private sector to come in and save the day. Less government, more private sector. And yeah, I do agree. You need the private sector to really save the day on this. And that's what they're doing. So your kids are probably going to be doing online schooling from home, the same way you guys are doing online school here at Wall Street Jackboyz. That's what's happening there, right? And so that's something that you guys will probably hear in the next couple of days if you already haven't heard it. They're going to try to send the kids home, doing schoolwork from home. And that's interesting. Me and Mark, we had a conversation about this is because I know right now we're focusing on the beginning of the downturn. We just, we ended the 11-year bull market. We're now in a bear market. And this economy has to rebuild itself. And when it rebuilds itself, that's going to be the test. How do we rebuild when we get out of this? And when we rebuild, a lot of things are going to change drastically. Right. In my data science course, I was, getting my certification in data science. And I also learned some artificial intelligence. I learned how to code, basically. And I learned how to write artificial intelligence for those that don't know. And when they showed us a lot of models, they showed us a lot of things. We learned a lot, and we learned about Silicon Valley and their plans to help the citizens. If you guys remember that guy, Andrew Yang, who ran on the Democratic platform, who was talking about giving people like $1,000 a month. And that's a socialist program like Bernie. But it's interesting because that came from Silicon Valley. And this was about 2-3 years ago. I learned this in my data science class. It was talking about Silicon Valley had that plan. He tried to run off of that plan, basically. And he ran with Silicon Valley behind him because he's a tech guy. And I thought that was so interesting because I learned that in my data science class that we was talking about, because artificial intelligence is going to replace a lot of jobs. And the rebuilding of the economy itself, when this thing recovers, rebuild, they're going to learn a lot of weaknesses that we have today they can't have in the future. What is the weakness? When I started, I learned how to do Google TensorFlow, right? How to write Google TensorFlow, artificial intelligence. Scariest thing I've ever seen in my life. You guys ever seen Elon Musk talk about artificial intelligence? He says, we woke up the devil. He said, I tried to go to Obama and Congress and try to tell them. They didn't listen to me. So I said, forget it. I'm going to start my own thing, right? And he got his company who's leading that. He's trying to merge artificial intelligence with our brains because he thinks that that's the only way that we're going to be able to survive this. The thing is that when we train the artificial intelligence, it is a computer algorithm. It's a mathematical equation. This is algebra, okay? It's not a human, but it's built off the neural pathways of the human brain. So the way that your brain makes decisions, we're training the equations in the same way. We're giving it rewards and we punish it. We may give it a number. We may give it a number 0 for punishment and a number 1 for the reward. And what it does, it loops. It has these for loops that it keeps looping over and over again, trying to figure out problems. And as it makes mistakes, it never makes the mistake again. It gets better and it layers on top of each other. So it goes from 0% success all the way to the highest level of success that you can attain. And we try to write models, to the best as we possibly can, 99% accuracy levels we try to get it at. But it does that once you get the models, it can do this stuff in an amount of minutes. Okay. Well, on my level, the government, you got to understand, they're much better than I am. They can do this stuff in no time. So if I can do it, and I'm just a Wallstreet Jackboyz, you already know what Elon Musk and all the other guys, what they got. And so that's going to be the rollout for the new rebuilding of this economy, is that the problems that we found is that humans are the problem. I'm not saying this to scare you guys. I'm just saying this because even in my data science class, we was talking about ophthalmologists, the eye doctors, right? The eye doctors, when they're doing surgery on your eyes, we're talking about the very best eye doctors in the world have a success rate of about 40%. Okay. So about a success rate of about 40%. And it was saying that the artificial intelligence, they can get it to right about 89% success rate. So you as a consumer, if you're going to go get your eye fixed, who in the hell you want working on your eye? Right? If the very best doctors only have about 40% success rate, right? You probably want to go with the 89% or the 90% or the 99%, because again, it only gets better as it gets more data. We fueled the fire with our smart devices. It's collecting so much data. We need big data to fuel this. We had artificial intelligence in the 80s. We didn't have the data to feed it. We need big data. Now we have it. Everything's smart now. So the whole ushering in of smart devices so they can collect data on us. It knows everything that you like, everything you want, what you're searching and things like that. We take that data, we have billions of, we have exabytes of data that's in the world. We have too much data and we need people to man it. That's why people with data science jobs, they're making over hundreds of thousands of dollars a year because it's high in demand. They need people to man this data. So with this ushering in this new economy, I encourage people to get new skills so that when they start to roll the robots out, which they've already been doing, but they're going to do it very rapidly because it's going to be necessary to sustain business and to compete. They're going to replace humans. They're going to replace humans because we are the problem. We make mistakes. The robots are not making mistakes. That's the problem. The transportation, there's a reason why you have the push. You see Tesla and all of this jumping up crazy because self-driving cars, it's a reality. We already have it. They just got to go through the bureaucracy, the regulations, right? Google is leading in that. Google have their thing, and then you have Tesla and all these other companies. They even stopped their production of the gas cars, and they're doing electric cars. The demand is going to drive it to be this way, right? All right. So you see that. That's going to take away a lot of jobs, right? We got automatic trucks. We have artificial intelligence driving trucks. Truckers are in a recession right now. They've been in a recession before the recession. So these companies, they're going to have to roll it out. It's going to be by nature of corporate environment, right? So if you understand corporate culture, that means return value to shareholders. That's what we're trading here. The stocks we're trading, this is all about these companies getting money from us so that they can deliver value. And because we give them our money, kind of like a giant GoFundMe account, that's what you could look at Wall Street. But instead, we get a return for helping them out, right? We get stocks and we have appreciation, we have dividends and blah, blah, blah. And so that's how they're able to continue to grow. They're going to have to keep on pleasing shareholders. And so just keep that in mind. Be careful. I know people are saying buy stocks right now. Let the markets calm down a little bit. Even if it's a dividend paying stocks, you got to understand stocks, they can choose, companies can choose to not pay dividends. If it makes sense for the business to not pay dividends, then they can cut off dividends too. So it doesn't mean that you're always going to get dividend payouts. Understand this, okay? So anyhow, I just want to get you guys informed. I know I'm a little over time and I'm tired. I do need to get some food in my body because I'm just getting off the road. But definitely make sure you guys check out the website, wallstreetjackboyz.com, if you already haven't. Drop a link in here so that you can see it. wallstreetjackboyz.com. You said they're going to implement a curfew. I did see curfews already. Actually, Topaz, they got curfews. I saw, geez, I forgot what state it is, but they got curfews at certain nightclubs, bars, and stuff like that. They already issuing that out. And this is going to be crazy. That's all I got to say, so wait it out. But for you guys, if you haven't signed up, this is the website, wallstreetjackboyz.com. You can sign up right here, get into your courses. Anybody have any issues with the new website, getting access to the courses or what have you, let us know. Everybody has a DM. So when you sign up, you get a message box, just like you get on your Instagram and just like you get on your Facebook. Connections, when you connect with people, this is like the network thing. So make sure you connect with people. We got a couple of, people here in the group. Make sure you send connections. These are the people I'm connected with. Make sure you send me a connection request, okay? Because if you need assistance, now you can reach out to me directly through your inbox. If you need any assistance, and not just me, you can also reach out to your peers. Ron, you got to get a picture in here. Ron, come on. You got to let the people see your beautiful face, man. You know, you the Mac Daddy OG. Justin, you got to get some pictures in here too. We got Mia, Topaz, Wes, Sid, Tashawn, Meg. We got everybody in here. But anyway, just connect with us here. Again, we're trying to move away from being under the control of the social media platforms, whether it's YouTube. I never did YouTube. This is our first time doing YouTube, but Facebook and all this other stuff. But we're going to create all of this on our website, and we control all of this, right? I control all of this. I'm not going to ban myself from saying certain things on my platform, right? Because it's our platform. But you guys can see, you go to courses right here. Still actually rolling out some things you guys know, just now getting off the road. So I do have plenty of work ahead of me this week. But as you guys can see, this is our beautiful new and improved website. The functionality is off the chain. So make sure you guys check it out. Make sure you check out that nighttime. I'll be studying in nighttime. That black is that is relentless. You feel me? So also I did upload the stock foundation course for you guys who haven't had the stock, your foundation of stocks. This is a really good course right here. This is included in the master class. But it's really going to break all of this down. So you get your learning on right here. This is what it looks like. So this is your experience, here at Wall Street Jackboyz. And that's my goal, is to give you guys the best learning experience, the best wisdom, best education I possibly can give you. So that's what it's all about. Anyhow, any questions, let us know, and we'll take care of you. YouTube side, forgot to address you guys. Sorry about that, Sam, my man. Everything is selling off. Silver spot is down now. Watch it drop to single digits. Yeah, silver is not doing too good. Gold is, we're still in an interesting situation, so I don't have any recommendations on that right now. Liquidity dried up. People will start selling the hedges of gold and silver. The Fed's buying bonds. Gold is going up. Yes, gold is going up. This is very volatile. We're going to wait it out. Okay, wait it out. Monday, nobody get into no kind of move. It's just going to be crazy. Tuesday, we get a better footing. But Wednesday, the Fed may pull the rug from under us. So we got to watch what the decision of the Fed is going to be. So Wednesday, so Thursday, I'll be more inclined to get into any kind of trades, or Wednesday after the Fed speech, which is after 2 o'clock. So the 2 p.m., the PM session on Wednesday, I'll be able to have more certainty on what kind of moves I want to make. So anyway, there we have it. All right. So I hope you guys enjoyed. Y'all enjoy the rest of your night. Peace.